Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Welcome everybody, guys. Today, as you can see, we just can't ignore such action that we see right now on the euro currency, and we should discuss this moment. Well, briefly speaking, you probably guys know about the recent consumer price index that has been released yesterday. In general, it matched the expectations of the investors. Even core inflation was released a bit lower than investors expect, but in general that hasn't changed the overall view that Fed Reserve should start the tightening policy at the end of the 2015. And just this, even we could say that this is even support the expectations. And many investors' analysis tells that as Fed stands at the eve of the possible hiking, or at least changing the rhetoric, changing the speech character, in favor of the possible hawkish policy in the euro zone, we probably should be ready for more easing. At least the question of possible hawkish policy doesn't even stand at the horizon. So that's why in the nearest future this will probably press on the euro USD currency pair in the favor of the US dollar, and we could see some strength of the US dollar for some period. It not necessarily will lead to the fast acceleration to the downside, but that will be pressed on this currency pair, and this will probably prevent the possible significant retracements or euro appreciation in the nearest term. Second moment, as we said in our weekly research, it's not really only fundamental data will impact the market, but this data should be confirmed by the corporate sector. And from that perspective, the period of earnings reports from the US companies is very significant. And currently, the large part of the companies already have released the reports, and by the Reuters data, approximately the 66% of the companies have topped the expectations, and that really even more significant, the present data on inflation. That tells, and that will probably press on the Fed as well, that there also some improvement could be seen in the corporate sector. And that creates the overall picture that is relatively positive, moderately positive for the US dollar. That's why this data has really a two-edged sword, because from the one point of view, this significantly support the expectations of the investors that Fed should adjust rhetoric in favor of more hawkish policy. But from the other point of view, if Fed will not do this and will miss the expectation, that will lead to the greater disappointment of the investors, and that could really could trigger a very significant retracement on the euro currency if Fed will not support these expectations of the investors. But till the Fed meeting, we probably will see some more US dollar appreciation, and maybe right at the eve of the FOMC meeting, we could get some retracement from the short-term traders who will take profit from the recent downside plunge on the euro currency. That's the our medium-term expectations on the euro currency. So now let's go back to the technical analysis of the short-term perspective. So guys, our ultimate target for a couple of weeks have been reached. You can see it by this recent plunge down. Market has hit significant support area. Although market not at oversold, but it stands at the yearly pivot point again since February. That's the second touch. Market stands at 127 of the butterfly. Also guys, that is the weekly pivot support 1. Don't forget that this is also the weekly area of the weekly FIB support. Okay, on the weekly chart, this area. And from that standpoint, some retracement is possible here. But to be honest, guys, I'd not expect, at least currently, I'd not expect significant retracement as we have expected initially. Initially, we thought that this really strong support market will probably show 3-8 retracement of these thrust downs will be significant in an area somewhere around, again, weekly pivot point or something. But right now, taking the picture, I'm not sure with it by some reasons. First reason is this candle. When the market shows acceleration in this really significant action right to the 127 target, it means that it's really high chances on that continuation to the 1618. 1618 would stand around 133.95 area. By the way, BNP Paribas Bank tells in this letter to his clients that they expect to see 132 on euro currency. I have placed this in text version of this update on our forum, so you could read this. So they expect even deeper action on the euro currency right now. And in general, we already have announced that second return right back down to the yearly pivot point does not promise any good issues for the bulls. Because if market has bounced up already but hasn't quite reached the yearly pivot resistance one, has failed to continue move high and return right back down, that's in general the bearish sign. I can't exclude that the long-term sentiment could shift on the euro currency in favor of the bears. That's also possible. Right now, there are a lot of reasons and a lot of variables that could take the crucial role in the current situation, not just the economical, but also the geopolitical. Well, so the first reason that market could continue move lower is this candle. Because this really strong downward action, and this, in most cases, this really fast acceleration. In most cases, this leads to the continuation at minimum to the 1618. It's 133.95 area. Well, the second reason, take a look at this action. When the market hits intraday ABCD target, this was no really significant bounce. It's just 3-8 retracement. It's very small bounce up. The market continue move lower. Third reason is fundamental picture that we just have discussed. It's in general supports and will press on the market in the nearest perspective. Geopolitical tensions rises, fundamental situation in the United States economy improves, and has been confirmed by the corporate sector as well. So all these moments create some positive atmosphere for US dollar. Not fast plunge, not really drastic acceleration, but gradual and smooth action is possible. At the same time, in the short-term perspective, we can't exclude the possible small retracement, but this retracement will be probably somewhere of that sort. So if you take a look at the 4-hour time frame chart, we'll see that first of all, market stands very close to the 1618 extension of our ABC top pattern. So that was the 100% extension. You see the consolidation in this area. This plunge down, fast acceleration down. This 1618 extension. So here market probably should hit this somewhere by small spike down. Market probably will hit this target first. But the retracement, I think that the retracement right to the 135.13, 135.22 area is more probable than some significant action to the upside. First of all, that is some kind of the harmonic swing. So you can see this retracement approximately equals to this one, and if market will show the same retracement, it will precisely lead us right to this confluence resistance. Also, it will retest the previous consolidation. That is normal when we expect the continuation to the 1618, and we currently expect this. If market will break this area and return right back down to this area around 135.50, in this case we could get slightly different picture, because that will be the confluence resistance. You can see now the confluence 135.50 area, and in this case we could get picture as on an hourly time frame chart. Here we have also reversal pattern, butterfly, that could trigger some retracement, but here could be the part of the head and shoulders pattern. This very often happens, you know, guys. We have seen this very often when the head and shoulders pattern becomes the part, the butterfly becomes the part of the head and shoulders. And if market will return right back down to the 135.50 to the neckline, that will increase chances that we could get really some A, B, C, D up, some deeper retracement. Well, we can't exclude it totally, but taking into consideration the overall picture on the daily chart and the recent data, we think that this chances is not as significant as the possible downward continuation to the 134 area after the minor retracement. So here, guys, the chances on appearing of some sort of the free drive buy pattern or something, of some wage pattern or something that sort, are greater than to see upward retracement right from this area. So we will keep an eye on it. Anyway, currently is not the best idea to take the short position. It's better to wait a rally to the upside if you would like to sell. And the first target to watch for is potential selling, stands around 135.20 confidence resistance.